Hello and welcome, and thanks for joining this week's episode of the Tucson Home Inventory Report. And each and every week, we dive in to see what's going on in the Tucson housing market. And the one thing that I like to look at, which the leading indicator to me, is home inventory levels. And over the last couple of years, as everybody knows, there's been upward pressure on home prices, and it's just largely due to lack of inventory and a lot of demand. So I like to look at the home inventory levels as the leading indicator. And there's no crystal ball, but to me, looking at home inventory levels are the best crystal ball that you can have in order to foresee potentially what's going to be happening in our market. And it's all about supply and demand, economics 101. The last couple of years, our supply has been going down rapidly, and as a result, we've had a lot of demand, which has caused our prices to appreciate double digits over the last couple of years. So, like to dive in and look at those numbers. I like to look at them every day and then share that with you as well as far as the home inventory levels. Just so a little bit of news. Last week the Feds met and the FOMC meeting in terms of interest rates. They decided not to do anything. I was a little disappointed. They did not raise rates, but I think, raising rates a little bit would be a healthy thing for this market to kind of tap the brakes and cool this market off a little bit to slow things down, because we need more inventory. At the end of the day, you can't sell out of an empty wagon in terms of real estate agents. It's very frustrating, especially when you're working with buyers and there's just not a lot of inventory. It's like going to the grocery store and there's nothing on the shelf. And that's what we're dealing with right now. There's not a lot of inventory. Inventory levels were starting to go up, and they've actually gone down dramatically even in the last 2 or 3 months. And I'm going to dive into that. I'm going to share my screen and show you the numbers. But again, it's, as Tucson's cooled off and the winter visitors have come to Tucson, I was always curious to see what that would do to inventory. But again, it's pushed inventory levels down lower, which is putting more upward pressure on prices. So I'm going to go ahead and I'm going to share my screen here. And what I like to do is each and every week, I dive in, we go into the MLS, and I'm going to pull up active listings by some different categories. And then I'm going to jump on over to an Excel spreadsheet and we'll put that in there so you can get a visual of what's going on. So I have got the Tucson MLS pulled up. I've got Tucson and then active and then single family homes. And if you look right here, there is 651 active single family homes listed in the MLS, which is really low. I mean, in a normal, healthy market, we should be, I'll wait to tell you where we should be once we get the combined total of everything. So single family homes, 651. I'm going to write these down and then we'll jump over to an Excel spreadsheet. Manufactured homes, there is only 60 listed in all of Tucson within the MLS. Condos, we have 34 active condos listed in the MLS right there. And then townhomes, there are 53 townhomes. So now what I'm going to do is I'm going to pull up an Excel spreadsheet, and we will put some numbers in here so you can get a visual of what's going on. So single family homes, there were 651. Manufactureds, we had 60. Condos, there were 34. And then townhomes, we had 53. So the total active listings in the MLS, 745 active listings in the MLS, which is down this week from last week, 122 reduction in inventory from week to week. So the weekly change is 16%. And since I started tracking this, so back in July, August, I felt that this market was starting to shift and inventory levels were starting to tick up. And so I wanted to track it, kind of get a visual of what's going on. And so inventory levels were starting to tick up. And then as the temperatures cooled off in Tucson And when winter visitors came back to Tucson, it's pushed that inventory down again to the lowest levels that we've had in a long, long time. So if you look at a chart here, you can get an idea. Um, so we were tracking up, and then since around November, December, we're now back down to some all-time lows. So it's a little frustrating out there for everybody, agents included. You know, it's frustrating because you've got people that want to buy homes. They're starting to get priced out of the market, and there's just not a lot to choose from, and you're competing with multiple people. So I feel you. If you're a buyer out there, it is definitely. I got uh, my Tucson housing market meter. It's definitely a seller's market. And in terms of a normal supply and demand, in terms of inventory, a normal supply and demand for Tucson's probably about 3,500, 3,200 upwards to about 4,000 active listings, which would be a neutral, normal supply and demand. So we're well off of that. Prior to COVID, we were below that as well. We were in the high thousands to low 2,000s, and then COVID hit, and it was just a decline ever since COVID hit. So that's a good visual of what's going on. Now, what I want to do to give you even a bigger picture of what's going on is jump on over to Zillow. And the reason I like going over here, because when I pull it up in the MLS, it's just Tucson. So with Zillow, it's Tucson and the surrounding areas. And then we can also pick up FSBOs as well. So if I pull up Tucson, there's 1,000. I'm going to write this down. We jump back over to another spreadsheet. So 1,033. And then right here, the other right there is for sale by owners. So again, this just picks up everything. If I jump back over to my Excel spreadsheet, I'm going to put in the Zillow numbers. So 1,033, and then the others for sale by owner. What was that number again? So for sale by owner, 202. So again, about the same. From week to week, we had a 10% reduction in inventory. And when I started doing this, we're down 58% from when I first started doing this on Zillow. I wasn't tracking Zillow right out of the gate, and then I was just curious to kind of get the bigger picture. So the question is, what is this doing to home prices? And over the last couple of years, we've had double digits in the between 20-24% monthly appreciation rate. And as far as the average or the median sales price, there's a big difference between average and median. You want to look at median because the average takes everything and divides it by how many sales. So there could be a really high sale, a really low sale that actually has a big impact on that number to where it could skew it. So the median takes out the high and the low, so you get a much better representation of the average sales price. So the average sales price in December, January report hasn't come out yet, was $352,500 for a single family home. And again, it's been a little nutty, about 60K in about 12 months. So if you look at a chart here, that's what it looks like from the time that in the last year. So a little crazy out there as far as inventory levels. Let me unshare my screen. So yeah, inventory levels and just tracking it, I think it's important to keep an eye on and to see what's going on in our market. And what I've been doing, I was doing this weekly. I'm going to do it every other week. And so if you have any questions about the Tucson housing market, you can go ahead and comment below or reach out to us. We would love to help you. And if you use us to buy or sell a home, we've got a 16-foot box moving truck that you're more than welcome to use. And even after the fact, if you need to move appliances or furniture, you're more than welcome to use our moving truck. So that's it. I like to keep it short and sweet. And again, if you have any questions about the Tucson housing market, but again, keep a close eye on inventory levels. And all it takes is one catalyst. And I was a little disappointed that the Feds didn't raise rates in order to slow this market down, put the brakes on just because of the inflation and the CPI number. I was really, really surprised when the Feds didn't do anything. But at some point, they're talking about raising rates, and when that happens, it will, in my opinion, make homes less affordable because of higher rates, and as a result, could potentially uh, put the brakes on and increase inventory levels, which will slow things down. So it's something we're definitely keeping an eye on. And again, if you have any questions, let us know. In the meantime, make it a great day. And again, thanks for tuning in.